So this is about change in trend, and if we want to follow the trend, we certainly need to be aware of when it changes. And one of the habits that many people get into that's not a healthy habit, so you and I will head this off right away, is they really start looking at patterns to predict the future. They start looking at patterns in the way the stock moves and saying, well, I think this is going to happen. And certainly we have to, anticipate and have a bias. But I want to introduce you to the idea that you do not have to predict the future perfectly, and all we really want to do is get a likelihood. I've seen people get in kind of a rut with technical analysis where they say, well, this pattern means X and this pattern means Y and this is what it's going to do, and that's not a healthy approach to take. I think a more healthy approach is to really concentrate on what the market is feeling, and then you'll find that it's not like predicting the future. It's more like making a weather forecast, where the weatherman rarely says it's going to rain tomorrow or it's going to have sunshine tomorrow. Usually the weather person says 60% chance of rain tomorrow, 10% chance of rain today. And we talk about what's likely rather than making predictions like a fortune teller that says you'll go out and meet the person of your dreams tomorrow or something like that. So we want to make it a likelihood, not in stone. We do know that these are not tea leaves. Some people say, oh, you can look and make up whatever you want to. Not true. Actually, this yes right here is a solid yes. The only way that this thing is going up right here is if there's more buyers than sellers. That's just how market makers work. The only way this is falling is if there's more sellers than buyers. So we know that supply and demand is solid and that this is an accurate record of how people feel towards the stock. And so with that said, let's look at this one right here and see some possible points where it would change. Well, we have a point here where they said yes. And we see that after it backed off of its high price here, people seem to say, hey, it's getting a little cheaper, and they've decided not to wait until it got down to this bargain. Now they're seeing this area as a bargain. Well, the last time the stock quote was right at this price, the market said no to it. So the question on our mind is this, is it going to be able to pass that? Well, certainly they said no. But we also see the fact is support is rising, and so we do see their bias is increasing, and is there a likelihood it could go past this? Well, I don't know. At this point, I really don't make a decision. What I really do is wait for the market to tell me how they feel, and by having them tell me how they feel here is going to give me some pretty good insight on the trend of this stock. So here we go. This one, they say, hey, it's headed up. Well, no matter where this pulls back, it's going to have to be a high higher than this one. And no matter where this was before, it shot up here. So this is a higher low than this one. So I have an uptrend for sure. And they've proven to me that they're willing to push a little higher. And so it's really that this past, not the future, that I'm concerned about. I'm saying, yes, these guys right here like this stock. They're buying it higher. And it looks like right now they're willing to push it to new levels. Now, could this end at any time? Absolutely, it could end at any time. They might give us some clues to when it can end. They might not give us some clues to when it could end. But when you see how we set up the cash flow, you're going to find it's really not going to matter as much. Now let's look at the same situation here where the market says no, and it comes back and they see this as a bargain. Same situation we had at this point. And this time, sometimes though, when they say no here, let's go ahead and mark this with a pen. Sometimes when they say no right here, boy, they're not kidding. So it's kind of like this. I might ask my wife, I'm always trying to drop a few pounds, it seems. My wife says, Andy, in our original contract, I just want you to know there's about 30 pounds on you I'm not married to. So she will kindly and gently remind me of that once in a while. And I might say, we're watching a little ball game or something, and we'll be enjoying it, and things go along, and I'll say, sweetie, can I have some Ben & Jerry's? And she'll say no. Can I go up to the fridge and get myself some Ben & Jerry's? She says no. And then I'll wait for a minute and I'll say please. And then she'll change her mind and say okay. She'll give me the okay. I'll give in. I'll go a little further. But other times I'll say this no, and she'll come right back and say no, absolutely not. And so this behavior right here is different, isn't it? Here we saw that they were willing to push a little further. And right here we can see that the market is digging in. They're quite serious about saying, no, we're resisting this. for whatever price we're paying here, no, we are not going to pay more than that. The market does not see a value here for whatever reason. And so, I look at it always this way when I see a double top. A lot of people see just the pattern alone. I see a no that's small here, and then I see him come back and say, hey, no, we're really serious here. We are not interested in buying it here. Now, could the stock shoot up and have them change their mind? Yes. But I think it's probably less likely, because when I get one no, well, yeah, but support is rising. But boy, if I get two in a row, there's no question in my mind that this double top over here is a stronger signal to say, no, this is it for a while. And I think it's less likely to achieve a higher high. Not to say that it's impossible. I'm just saying that the chances of them getting past here now have gone down simply because they're digging in. They're saying, no, absolutely not. We're not interested in this stock. So this is one of the first two patterns we can learn. The uptrend is when we're achieving higher highs and the market's pushing it just a little bit. A little bit too far, too fast. They say, no, let's back off. Well, actually, it's a pretty good deal. Up we go. But in the double top, they give us a no initially. Too fast, too far. Backs off. They say yes, and then they follow up. No, we're really not kidding. This no means no, and so that is when no means no. It's when we have the double top, and so that's a pattern I like to teach early on, with you. Now, notice this is when we have a double top. One of the things we look for now is we had a no here and a no here. And remember, we're talking, the context of our conversation is what? Let's back up here. It's when, let's just back up just a little bit, we're trying to find when the trend is going to change, right? When is the trend going to change? And so we come here and we see our double top is formed. And is it time to go short? Is it time to change our opinion on the market? If the market's going up, we make money going long. If it's going down, we make money going short. And a lot of people make a mistake. They'll say this M stands for murder. And they say, oh, that's it. That's going to be reversal. They've changed. And they use this pattern as a guarantee. And I think that's unhealthy, because think about it. They were saying yes here. So the question is they haven't done anything to really change their mind other than making this yes a little higher. So what I would like to see happen is I'm curious to see if they're willing to hold this area right here. And so what I really look for after double top is I'll look at this area right here where they were saying yes before. And I ask myself, do they still feel this way? And what will really make this change more likely is if they go, they dig in up here with a no, and they come back, well, maybe it's not so bad, and they dig in here with a no. Boy, now I want to see if they still feel it's a good bargain here. And if they don't, now I can start to maybe justify thinking that, hey, maybe the party's over. Maybe this thing's had its peak here, and now people aren't excited about it anymore. So I hope what you're getting is to see that through looking at levels of support where they say yes, and looking at levels of resistance where they say no, we can start to get a sense of how the market can feel about a certain stock. Now I want you to see something here, and this will be a tremendous value to you as you trade stock, is that often support, this level of support, will turn to resistance when broken, and vice versa. You will not see this hundreds of times. You will literally see this happen thousands and thousands of times. It's very much human nature. At this level, I'm not going to go into the psychology of why this is true. I think it's good enough just to now as let's set this as kind of something you'll watch for. It's just, there is a reason for it, no question. But rather than delve into that, it's kind of like driving a car. Let's work on turning the key and the brake before we take apart the whole fuel injector. But I want you to notice that this yes part of support, once this breaks down here, this will often act as resistance. So I can see a big change here, can't I? If I were to use the idea here, maybe we say, well, this right here is a yes, and at this point right here, what happened? They changed their mind. And what made this stock go down right here? They started saying no. We've changed our mind. Before we liked it, now we don't. So this point right here is a point where they became supportive of, they were supportive of the price at this point, and now they're saying, actually we're resistant to this as well. So look at this. We have this initial no. It comes back. We dig in. We say, we're really serious. This is as high as we're letting this go. And then it begins. This is really where I see things starts to change, is when this begins to break down here. Once they change their mind here, now I think it might be even more likely that we're having a change of direction. We're starting to achieve, at least we've got now a what? A lower low, don't we? We don't yet have a lower high. These are equal, but that downtrend was when we have lower, when we're achieving lower prices than we did on our bargain. We're seeing this as a bargain lower and lower now. So interesting stuff. The question now is, are they ready to do it again? Now some people will short right here, and they will put, well, when we do cash flow, we'll talk about this. Some people will enter an order to short right here, and they're certainly justified because we've got no, certainly justified. But what I like, and if I miss one of these, I'm okay. But I like even a little bit more. I like to see what they're going to do again when it retests it. Often they'll come back and the market will push it up. They think, hey, here's a bargain. And often you'll see this. It doesn't rise too fast before they start showing, showing some resistance. It's tough for things to go up really, really fast without people saying, hey, wait, too much too fast. Well, it's also the greed that people have. It's very difficult for things to fall off their highs, and people say, boy, I'm getting a bargain. People love falling prices over here. So again, even though it falls below where they used to, and it looks like it might be a little trouble, again, people are thinking, wow, look, it used to be clear up here. This is cheap. This is cheap at this level down here. So I'm always curious to see what it's going to do right here, and this is usually where I really start to see confirmation, okay? And we call this little kiss. It comes down here, it comes back here to what used to be support. Now they were resisting it. Remember, the reason this is going down where my arrow is because they were saying no. More, we know for a fact there were more sellers than buyers. Once it comes back up here, it's kind of going to give this line a little kiss here. So the question is this a kiss hello where we're back on track, or is this going to be a kiss goodbye? They changed their opinion here. Do they still feel that way? So what you're really doing with support and resistance is finding different levels in the stock chart where they like it and where they don't. That helps us make decisions. Oh, and there they give us a no, and so this is a full-fledged kiss goodbye. So here's three patterns. Let's back this up. We have the uptrend where it's achieving higher highs and higher lows. They dig in. No means no, and we have a little double top. Remember, it looks like the letter M. Some people say M stands for murder. I've heard that before. And then we come here and we give it a little kiss. If it drops down, boy, that's a kiss goodbye. So we have the uptrend, we have a double top over here. Anytime it comes back and it kisses this and it takes off, this action right here is called a kiss goodbye. And this happens all the time, where support then turns into resistance, and where they were saying yes before, now they're saying no. And I said we're trying to figure out changes in trend. I think this is the most telling of where they've changed their mind. They changed it the first time right here, and they said no, and now they're digging in again and saying no. So they've dug in here and said, nope, we're not selling it here. Well, guess what? We're buying it here. We're not buying it here either. And so now I can see this negativity in bias that's absolutely real towards the stock, or they wouldn't be saying no. The only way these can go down, it's an accurate, this is not tea leaves. I've heard people say, oh, it's all tea leaves. No, it isn't. The stock cannot fall unless they're resisting that price. It can't fall further unless they're resisting that price. So, there's news that affects this. There's unknowns that come in and affect this, and that's what causes them to change. But all things the same, we can gain a lot from watching technical analysis. So there's our downtrend now. We're in a full-fledged downtrend. We've had a lower swing low. We've now had the lower swing high. And so the kiss goodbye gave us our downtrend. Now I'm prepared to change my bias, and I'm going to look to the downside. I'm going to look to make money on the downside. And this can be done with the broad market. It can be done with individual stocks, and hopefully we're doing both in concert with another. So review this often, and I know it seems like a lot, but it's like anything else. You focus on it, you keep a good pace. This will help you move towards proficiency, right? Now, can patterns predict the future? Nope, doesn't happen. So please do not use, this is a crystal ball where we say, aha, this stock will continue to fall. That is not what a double top means. Let's understand what it means. It simply means they said no here and they said no here. This stock could absolutely, very easily just take right back off and head up to a new high. Some good, some announcement happens, whatever, and they can say, well, okay, and give in. No question about it. It can happen. So let's not get into the habit of these people that say, oh, double top, time to short, because it's just not necessarily true. And also, I think it's wise to look for some of this confirmation that we have. We certainly had much more evidence at this point that it had changed direction, that bias had changed, than trying to do it a little too early. So these guys, I'd like, before I predict rain, to see some storm clouds actually, and to see maybe a couple of drops of rain, saying, hey, it actually looks like it is going to rain, let's open up the umbrella, rather than saying, hey, it's sunny today, but tomorrow. See, they have not proven that they don't like this price yet. See that? See why I don't like to go that early? They have simply not proven that they're willing to let this fall at that point. So again, people say double top is bearish. Well, it's certainly more bearish than if it would have broke a new high here, but certainly not something I'm going to go run around and start shorting stock on. So they can't predict the future. Maybe it's a good discussion to have, that it's like a chance of rain. And maybe what we do is, instead of looking at this as a way to predict the future, we look at the double top perhaps as an alarm, something that gets my attention. An alert, you push a button that says fire. An alert is something that simply gets my attention. Well, certainly if I'm long in the stock, if I'm trading along and it seems to be going well, and it comes back here, and I see this second point where they refuse to buy. They say no once, they say no twice, they're digging in. That gets my attention. So an alert is something that simply is designed to grab people's attention. That's what the word alert means. I want to be alerted. I want to pay attention. It does not mean that things are going to fall apart. It could very easily, be a false alarm, so to speak. But, whether an alarm is false or alarm is real, it's going to get my attention either way. I certainly could say that with a double top, is this a place where you would feel more comfortable in entering? Let's say someone recommends the stock. Let's go back just a little bit. Let's say someone recommends the stock. Well, if it's in an uptrend, and when you see it for the first time, you say, boy, it looks like they like it a little bit more, and it looks like it's breaking new levels. Okay, I like their attitude. But if someone were to recommend the stock at this point where you see a no here and a no here, is this really a place where I think it's more likely to enter, where they seem to be digging in on this price right here? So yeah, this can be helpful, maybe not in shorting the stock, but maybe I'm less comfortable, and I say, you know what, I'll buy it if they change their mind, then I'll buy it. But if they don't change their mind, I won't buy it. And I'll watch and see if it can break through here, and if it does, well, that's where I'll look to buy it. So you can see how helpful this can be in decisions you and I make. Okay, so there's our alert, and it gets our attention. And I certainly probably wouldn't run into if a building had a fire alarm going off in it, I would wait till the fire alarm was off before I re-entered the building or entered. I wouldn't run right in, even though I might not see a fire yet. If there's an alert there, I'm going to be a little bit more cautious, I think. So when there's an alarm, there might be a fire. There was kids in high school that I knew. Oh, of course, I would never do this. But there were kids, I really didn't, but there were kids in high school that would sometimes hit the fire alarm to get out of school. And so we'd have what's called a false alarm, or sometimes you might be in a hotel or a building and so there's a malfunction or an accident that someone accidentally trips the alarm, or maybe it's just a drill. But when there's alarm, there might be fire. Hey, when there's smoke, there's fire. So the way we look at this in the market is with two important vocabulary words. We have certain behaviors that get our attention and other behaviors that we act on. Again, certain behaviors that get our attention, that's called an alert, And once we see smoke, hey, that's confirmation. We need to do something. So that's kind of alert and confirmation, and a double top is certainly alert. So let's go through the stages in the trend right here. We see we're achieving higher highs, possibly higher lows here, definitely higher lows here, and this is bullish. So I'm going to continue to, if the fundamentals look good, if the market's in an uptrend, if the stock's in an uptrend, I certainly feel good about having my money in this, especially with risk management and exit strategy we'll speak of later. But things are looking good. The market is kind of confirming that, yeah, we kind of like this more and more, and we're willing to pay more and more for it because we're seeing more and more value in this company as we go along. When I watch for change in trend, though, is when it fails to achieve that higher high, right? We said no here, and then we really, dug in and said no here on this second one right here. Then often we'll see that this support, and remember this happens all the time, that this support right here will often become resistance, and this will happen thousands of times. And what's this called right here? That's right, this is called a kiss goodbye. So there's three different patterns. Uptrend right here, double top is an alert, and it actually is the end of an uptrend. What is an uptrend? When it achieves higher highs. So this says, hey, the uptrend is ending for the moment, and only if it achieves a higher high does the uptrend resume. And right here is this classic pattern that I love to exploit, where we can see the support level where they were liking it. The only reason this can go up right here is because they like it, and now they said nope, at this point right here we don't, and this yes right here turns to no, and that you'll see that happen thousands of times. So that's kind of how you identify, one of the ways that we can identify a change in trend. Let's look at some others. So now that we've kind of drawn some, so to speak, maybe some stick figure type of charts, so I've just drawn some lines, let's take now a look at a real chart. I'm going to go back in time a little bit here. This is one of my favorite examples of showing a change in trend. And you remember during the 1990s, the internet was big. Apparently Al Gore claims that he invented it or whatever he said. And oh boy! And so we had this big boom, and people were like, "Well, where is this ending?" Because it kept going higher and higher. People kept saying yes, 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 yes. So this is the Nasdaq, and you can do this also in 2008 with the crash. You can do it in the most recent retracement or correction we've had after the S&P downgrade, for example. You'll see lots of these double tops and these behaviors. So let's look at some real double tops in a real market. We can treat this as an index. We can treat this as a stock. It really doesn't matter whether it's a commodity, stock, or index. This works the same way. So we might even treat this as a stock, show you how it might be traded. But it's just classic double tops. So here we see that the stock comes up here at a peak of a candle, comes back and settles. They say no. And they really say no right here. And it drops back down and shoots back up. Now notice these are called candles. And we're going to talk about these in this session. But notice, there's probably, there's 30 days between March and April. And there's not quite 30 candles here because the weekend, of course, we don't trade. There's no movement on the weekend. So this is what would be referred to as a daily chart, where we're simply, taking our time. These are usually the charts I use. I don't day trade. And so it takes an entire month to build this. So I simply just check in once a day and see what is forming. Day traders, they look at things that are every single minute. They have a candle that represents every minute. But here, this is just a daily chart. We've got 30 days between March and April, which is 20 some odd candles if we're not counting the weekend. But a person who's not trained might look at that and say, well, that's just a bunch of lines all over. However, if I look closely, I can see something here. I can see that it has a peak here, and this is called a what? A swing high. And it has another peak here, which is called a swing high. So I can see that they said no, just as we said. We'll put a big capital N right here. And it came back, and they said, hey, let's push these internet stocks, this technology stocks again. And they said, no, we're serious. This is it. This is as high as we want to push this right here. And so that didn't. Now certainly we could picture this, going up and finding a new high. I'm just saying that after they've said no twice, it's less likely than before. And so this is a double top, and the market fails at this point to achieve a higher high. It's kind of running out of gas. That takes a lot of money. Remember, what drives stocks higher? People buying it. And so it takes a tremendous amount of money to push these higher and higher and dump more and more money into equities. Which is a big deal. It takes a lot of money to do it. Well, what I'll generally do is when I see a double top, and this looks like M for mortar, and I've just traced over it so it's easier to see. So there's what the index looks like with the candles, and certainly we can see this M pattern, this double top pattern. Does that mean the stock is going to fall? Absolutely not. It simply means that, hey, it means what it means. They failed to achieve a higher high. So I might not be as excited in getting into this index or into these types of stocks right now. And I'm certainly curious to see what's going to happen. There's kind of an alarm going off saying, hey everyone, Andy, pay attention. They failed to push it higher this time. Maybe they finally find their limit here. So I'll draw a little line underneath the bottom of the N, and my question is, if you remember, this was definitely a yes because it went where? Higher. And it came back down and they said what? Yes again. And it went higher, right? So they've said yes at this line. So my question now is, since they've obviously changed their tune to this point here at the top, now my focus is, okay, well, they're still going to feel the same way about it on the yes side. And so that's something I'm going to watch for. Well, certainly they don't. They failed to hold it up here, and it came down so fast that what do people start saying? That's a bargain. We might not see these levels again. It was clear up here. If I buy it here, it might be up here again. So very strong downward movement, and then we get this whiplash back up to where the stock reaches this point again. So now my question is, look how this works here. I'll draw this. This line was called what? Support. And this doesn't happen just dozens of times, man. This happens all the time where it might become resistance, right? And I want to see if it will recover. This pattern's called a kiss goodbye. It's kissing it right now. We're going to see if it's a kiss goodbye here. And so what would a person do? Well, what I'm going to do, instead of predicting the future, is I'm going to visualize in my mind all three. I'm going to visualize it breaking through, I'm going to visualize it holding the same, and I'm going to visualize it heading down, because I really don't know for sure which one it is. However, I'm going to go with what's likely based on their behavior and based on how they've acted. They said no here, they said no again here, they've said no here. And so with all this no going on recently, I'm going to say the chances are they'll say no here again. So I'm going to put in what's called, we'll learn this later, an order to short the stock. Notice I'm not telling the brokerage to do it right now. I'll tell the brokerage, hey, do it if and only if it hits this level right here. So this is what's nice about not having to day trade, is this is an order I would put in the night before, and takes less than a minute to do. And of course, if you watch this just 1 minute every day, you just check in when the market's closed, you can look at it and bam, that quick you can see where it's been. So this is not a huge time investment. And I see this pull back here, and I say, okay, it looks like it's at that point again. Now it's time to put in an order to short. So now three things can happen. It can go up, down, or sideways tomorrow. And let's say the stock begins to travel up over the next few days. We'll just kind of visualize that in my mind. Here's a stock going up. That's fine, because I haven't lost any money. It's only going to trigger if it actually starts to head down, right? If it starts to head down, it's only going to trigger. Notice that I do not yet have a downtrend. It's important to note here. I do not have a lower swing high. I do have a lower swing low, but if this falls, that will form my lower swing high. So I visualize this going up, and I say, hey, if it goes up, am I happy? Yeah, because I'm not in the trade. I visualize it kind of going sideways. Am I happy? Yeah, because I'm not in the trade. This one happened to do what was most likely. And so now, boom, I'm in the trade. And I've got to tell you, I feel much more confident in being in this short position right here. Let's say, for example, now I have no here, I have no here, I have no at this point, and I also have no at this point. So now what do I have? I have a lower swing high, and I've had a lower swing low, and this is looking like a pretty good target right now because it fell here before. It can fall here again. So certainly, the next day I get put in, the next day it's falling a little bit shorter. Now, one of the things we're going to do right away is we're going to assume that things can change, because they often do. So I'm going to give myself a little wiggle room. Since I'm short, that means I would lose money if it goes up. Don't worry about why right now. We're going to cover that in our next class called cash flow. Don't worry about it now. We're doing just the technicals. Is what I'm going to do is I'm going to put in another order right here called an exit order, an order to cover. That way, if the stock does change its mind, I've got an exit, and this now becomes my risk in the trade. The distance from here to here becomes my risk. Now, what I like about having an order here is you'll notice that that we've had this phenomenon happening to where this is now what? Resistance. Remember how I said this had happened over and over again? Here they were supportive of it, and now this is the point where they changed their mind. It dropped through, and now this is resistance once again. Well, I like the idea of having my exit above here, because they'd have to change their mind for me to lose money here. They have to change their mind actually two or three times. First, they'd have to change direction right now, and it'd have to go up. Second, it would have to break through this, and then third, it'd have to hit my exit order. So I got lots of wiggle room in here where it can hammer up against the no, and fall again. So I like where I put my exit order. I like the idea that I think it can achieve this. If I've entered in here, that's a lot of reward, and that's not very much risk. So you're going to learn more and more about this in cash flow. Very hard to separate the two as a teacher, but right now let's just keep focused on the chart. So now a couple things can happen. Either it's going to drop and I'm going to make money, or it's going to head back up and I'll lose a little bit. If I make that trade 10 times, we're hoping we'll drop more than the ones that retrace and get us out. And with technical analysis and fundamental analysis, we feel we can have pretty good likelihoods in what we're doing. You think about this. People tend to want guarantees. It's not the way to work. But I certainly like this much more than hoping a 401k does something where I have no likelihoods, I have no input, I'm not looking at any type of data, just hoping the market goes up. So let's keep going. Once this thing falls for a bit, would it be wise for me to just sit here and watch it, come back up? I mean, it's getting pretty cheap now, and it'd be pretty hard for people to resist. So at this point, what often traders will do is they'll move that exit order. You'll notice the exit order was clear up here. I'll move that exit order right here. And notice now the same three things can happen. Perhaps I visualize the stock continuing to go down, and then of course I could move the stop order here and down further and further here. That's one scenario. I could certainly visualize this, going, sideways for a bit. But what I'm really concerned about is if it takes off and it starts to go back up. Well, if it does, boom, that stop market order will trigger. I got in right about, here. I'll be exiting right about here, and I'll collect and lock in this profit as it sinks if I'm short. So, and they'll be fun for you in the next session. He's saying, Andy, how are we making money when this goes down? Well, don't you think I'm smart? We're gonna get you excited about the next class, right? So that's gonna be fun. We're gonna get in right here. And so I want to really make this point here, even though it's a little bit too early maybe because this is technicals. I want to make the point here that even when I put in the order to buy right here, I did not do it at this point. I didn't say, okay, I think it's going down, buy it. I never do that. I say, I think it may go down, it's likely, so I'm going to wait for what? Confirmation. I'm going to make the stock move into where I want it to be. I never buy it and then hope. If I buy it right here and it goes up, I'm in trouble. If I buy right here and it goes sideways, I'm in trouble. So I make the market do what I want it to do. If it doesn't, then I was never in the trade. If it doesn't, then I was never in the trade. If it does do it, now I am in the trade with this limit order that says, look, I don't want anything to happen here. It's called a stop limit order. I don't want anything to happen here unless the stock does what I say. Well, the same is true in getting out. Here I've got a market order to cover in case it shoots back up. I don't want to have it go clear to the ceiling and lose money. And so again, notice I don't just say, oh, I've got enough profit now, I think it's going up, I'll get out. I don't know for sure where it's going to go. I just know it's likely. And so again, I get this scenario where if it goes down, I make more money, but if it goes up, I'm now leaving the trade. So I let the market put me into trades, and I let the market take me out of trades, and I never just pick a point and say, okay, this is what I think is going to happen, buy it. And so many traders do it that way, don't they? They pick what they're going to do and buy it. So I hope you're enjoying this on technical analysis. I get kind of excited watching this stuff because I'll tell you, it's a fun feeling to be making money when things go down. I was very fortunate and got in some very nice positions when the S&P downgrade occurred, and the market just was falling to pieces. And I remember I was teaching a particular class, and I had some positions in, and I was kind of watching my computer in the corner of my eye, and I saw the Dow drop 400 points. I was just like, I can't wait to see what this did to my account when this is all over. I mean, it's just so much fun. So you're going to have a great time. Up, down, sideways, we can make the money. The technical analysis helps it. Now, this leaps back up. Notice that our stop market is triggered, and so the order locks in the profit from here to here. Okay, and now we get to see the game. Now we're going to see if this lower or if this higher high here starts a bit of an uptrend for a while, and we certainly could. We can certainly follow this up for a bit. But I want you to notice something here, and this just takes time to recognize. But notice they said no here, comes back, and they said what? They said no here. So again, we see the market fails to achieve a point higher than this level, don't they? And oh my word, what's that? We have another double top in the market. These happen, all the time. You can see these right here. So again, it's M for murder here, not looking good. And what do? I draw a little line, and the question is, will they continue to see bargain? Obviously, they liked this price because they drove it up here. Came back, obviously they liked this price because they drove it up here. Obviously they did not like this price because they sold it here, and they did not like this price because it backed off here. So the question mark really is, are they going to hold strong in thinking that this is a good price? Is it going to shoot back up once again? Certainly could. That's why I don't like people seeing double tops and shorting right away. It is absolutely real that it could do that one more time. Absolutely possible. So again, this is simply a what? It's simply an alert. Okay, it breaks down, and I'll tell you, you're not going to see this hundreds of times. You're going to see it what? Thousands of times, where they like it and they support it. It comes down, they support it again. It comes here, and then once this is broken, now I know they've changed their mind. They're no longer supporting there. They're what? They're resisting it. They're resisting. And so what once was the support now is becoming the resistance, and I get my little kiss on this line, right? Now, I have to consider, I'm not going to treat this like a crystal ball where I say, I now know it's going down. I don't know that. I can't see the future. I don't know that for sure. So what I'm going to do, instead of predict that it's going down, I'm going to prepare. That might be a great way to really talk about this, right? Instead of using P for prediction, okay, let's see how well I can write this with my mouse. Apparently not very well. Instead of predicting, no, I'm going to prepare for this to happen. So how might I do this? Well, again, I can put in a stop limit order, and I'm just going to visualize all three scenarios. If it goes up, I'm never in the trade. If it meanders, I'm never in the trade. It's only if the stock goes down, and all it would take is it go to this point, and once they say no here, and once they say no here, now I am confident about being this trade. No, No, I am confident now with all of this activity from technical analysis. So can you see how we're telling the story, and how I'm much more apt to want to get in after confirmation, after I can see they definitely, they've said no here, and they've said it again. I just feel more confident in making that room. So making that move. So again, the word is what? It's not really predicting so much as we are preparing for a downward move, just in case this thing falls apart. Again, I want you to I want to reiterate, if the thing blows up and goes through here, I was never in the trade. A stop limit order means the stock has to hit this price. It has to start heading downward. We have to make sure this is a true point they're resisting before this trade triggers. So really fun stuff, and of course this one makes us a ton of money, and all types of things you can see. Now you'll see more and more of these as you go along. Yeah, they like it, no, and all this takes is practice. Does this look complex? Sure, it must the first time you see it. It absolutely must. But when you break it down into pieces like we have and just follow it little by little, one at a time, you'll see these things develop. And again, this is what, August, September, October, November, December, January. This is almost an entire year from February to from March to February here. So it isn't like, these 360 days here fly by. You get to watch this develop. There's plenty of time, all these types of things. And you'll begin to see things, certainly, look at this. Kiss goodbye. It has another what? Another double top, doesn't it? Right there. Draw a line. What do we have right here? Another what? Kiss goodbye. You could have entered right here, and sure enough, if it goes up, you're not in the trade. If it goes sideways, it goes down, boom, you're in the trade. Notice again, you will not see this dozens of times, guys. You will see this hundreds of times. Look, here they were supportive of it, right? And what happened right here? Here they were what? Let's get the red pen out. They were resisting it again. So again, we can see it right here. Here they were what? They were supportive of this price, no question about it. Very supportive. Change occurred right here, didn't it? And now they are resisting it. See that? No here, no here. So I want you to get used to seeing these levels of support and resistance. See, I can draw them with you right here if we want. They liked it, that's a yes. They liked it again, that's a yes. Oh, it fell through. This now changes to resistance. Came down here, they bought it, that's a yes. Came down here, they bought it, that's a yes. They came down here, they changed their mind, and now they're what? Oh, now they're resisting it. Now they're resisting it. They liked it here, fell through. Look at all these kiss goodbyes right here. Kiss goodbye, forms another double top, comes in, kiss goodbye right here, kiss goodbye right here. So these are really, really fun to watch. Notice the levels of support and resistance, how the support changes into resistance. The support changes into resistance. The support changes into resistance. This doesn't happen dozens of times. This happens thousands of times. So I hope you're starting to kind of see a little bit how this works. Hey, relax. It's your first lesson for many of you on technical analysis. I didn't learn how to play the drums the first time I sat down to a drum kit. I certainly didn't learn how to drive the stick shift the first time I let the clutch out. I stalled my car. It's normal, okay? What we do, we keep on moving. We do it, you and I together, one little session at a time, and we move from what? We move from ignorance to what? Now you are aware of support and resistance. Then what do? We become very competent with it, and then sooner or later you're going to become proficient. So understand, you're just at this stage. Don't expect yourself to be proficient on your first day, but do know that if you do keep moving forward, you will be proficient someday. No question in my mind. I know you can do it. So fun stuff. Let's continue.